Hello kind people of YouTube and welcome back to another video. All of a sudden, after a couple very quiet weeks, the crypto space has gotten incredibly interesting overnight with some very interesting things to talk about today. So let's jump into it with the biggest piece of news for the day. The one thing that I am sure most of you have already heard about. The big Bitcoin ETF that was proposed, that we were waiting for a decision on, has been withdrawn. And this makes a lot of sense, but let's take a look at the article and then you'll understand. Let's get all the context. Because there is a good reason for this. Or at least a good alleged reason. The CBOE BZX exchange has withdrawn a proposed rule change that, if approved, would clear the way for a Bitcoin exchange-traded fund backed by VanEck and SolidX. In a notice published Wednesday, US Securities and Exchange Commission Deputy Secretary Eduardo Aleman wrote that the CBOE BZX exchange had pulled its proposed rule change, which would have allowed it to list shares of the VanEck SolidX Bitcoin Trust if approved. The exchange filed its withdrawal on January 22nd. The proposal was filed last June when VanEck, an investment firm, teamed up with financial services provider SolidX to provide a physically backed Bitcoin ETF to the market. The SEC delayed any decision on the proposal a number of times, asking for public comment and taking meetings with proponents. The regulator faced a final decision deadline of February 27th. While the notice itself did not provide a reason for the withdrawal, some securities lawyers speculated that the ongoing government shutdown would result in the ETF being denied, as no staffers at the SEC are able to review the proposed rule change. And this is really the crux of the whole thing. The way this whole thing works is that they have this hard deadline, February 27th. They were not allowed to take any longer than that. But as it stands right now, there is no sign of the government shutdown ending anytime soon. And what the government shutdown means in reality for the SEC is, because the SEC is a non-essential government agency, it is currently working with a skeleton staff. So there are no staffers there to take a look at this proposal, to consider it, to discuss it, to read comments on it. There's simply nobody being paid to do that while the government is shut down. So there is a risk now that if the ETF isn't looked at and denied by the 27th, it would automatically be approved. But of course the SEC is not going to let that happen, because that would provide precedent for the future, and they're not going to approve this ETF without closely looking at it. But they cannot closely look at it right now. They're not allowed to do their job at the moment. So at this current point, if this hadn't been pulled back, if this hadn't been withdrawn, then the SEC would almost certainly, 99.9% likely, have denied this because they didn't have the sufficient time to make a decision. And if you don't have the time and means to make a decision, it is safer to deny it than to approve it and provide a precedent that might kick them in the ass in the future. So you can thank the US government at this current moment and this government shutdown for this situation. But it is looking like this will be reintroduced, maybe with minor changes in the future after the shutdown is over. So let's continue looking at this article. In an email, VanEck Director of Digital Asset Strategy Gabor Gorbaks told CoinDesk's that the filing has been temporarily withdrawn. Note the temporarily. We are actively working with regulators and major market participants to build appropriate market structure frameworks for a Bitcoin ETF and digital assets in general, he said. VanEck CEO Jan VanEck, probably not Jan, told CNBC earlier Wednesday that the proposal was being withdrawn and would be submitted at a later date following continued discussions with the SEC, yet those talks were essentially put on hold as a result of the ongoing partial government shutdown in the US. We were engaged in discussions with the SEC about the Bitcoin-related issues, custody, market manipulation, prices, and that had to stop. And so, instead of trying to slip through or something, we just had the application pulled, and we will refile when the SEC gets going again. In a previous interview with CoinDesk, attorney Ethan Silver, chair of the broker-dealer practice at Lowenstein Sandler, explained that if the SEC were forced to deal with the proposal, they would sooner deny it than be put in a position where it is approved on a technicality. Essentially what I was just telling you. So this is the rational choice. It's not nice for us because, of course, this ETF, chances for it, in my opinion, were pretty 50-50 on it being approved or not. But the whole thing is, this would have been one of the potential catalysts of another bull market, of another bull run. And with them having to withdraw this and then having to resubmit it. And of course, when they resubmit it, that means there's also a longer deadline after. That deadline will be months, maybe over a year in the future. So this entire thing is being pushed back much further than just the length of the government shutdown. Because as it stands right now, there was a deadline until the end of next month. Now, even if the government shutdown is over tomorrow and they choose to reintroduce it, that deadline isn't there anymore because it's now a new proposal again. They will have plenty of time, which means that we will likely have to wait much, much longer for a decision here. Now, you might be wondering, why do we care about ETFs? I've heard a lot of people ask, why do we care? Ultimately, this is what ETFs are the kind of thing that millionaire, billionaire investors, institutional investors, big money are looking for. And these being approved can just open the floodgates to a lot of Wall Street money, a lot of corporate money flowing into crypto. More than enough to completely change market dynamics and to launch a new bull run potentially. That could be the result of something like this being approved. And of course, it won't just be this one ETF. If they approve one, they are setting precedent to approve more in the future, to maybe approve ETFs for other cryptocurrencies or other products built on top of cryptocurrencies. This is a watershed moment, this decision. The first time a Bitcoin ETF or a similar product is approved by the SEC will be a major shift in the crypto world and in how crypto is looked at by institutional money, by big money. And as much as I understand not liking all these big money people getting into the crypto market, realistically, the only way we are getting a bull run that is bigger than last one, that will take us to over $1 trillion in market cap, is if institutional money, is if big money, is if traditional finance, if Wall Street flows into the crypto markets. Where do you think all that money is going to come from otherwise? So I welcome them because I know that's the only way prices will significantly go up in the future. And the approval of a Bitcoin ETF, if it gets approved, there was a decent chance that they would have just rejected it again. But this could have been a catalyst, and now that potential catalyst is being pushed back indefinitely. Who knows when we will get a decision now? Maybe it will just be in a couple of months. Maybe it will be in spring, but who knows? Maybe it will take until spring, until summer for them to even reintroduce it. Maybe the SEC will then take an entire half year or so again to make a decision. Who knows? The thing that we know is everything is being pushed back. And this will likely just result in a higher chance of the bear market continuing for even longer. You have the current US government to thank for this. Okay, I promise this is the last negative article of the day. The other two articles after this are positive. But CoinDesk ran a ridiculous hit piece on XRP, and I just felt the need to talk about it. Because, okay, I want one thing to be clear before we read this. This tries to pass itself off, and CoinDesk in general tries to pass itself off as them just reporting on relevant news and being impartial. But the moment you start reading, first of all, this would not have been newsworthy. This report is so utterly ridiculous that it wouldn't have been newsworthy unless to critique it. But they're not critiquing it here, they're reporting on it. And once you start reading, you will see the obvious anti-XRP bias from CoinDesk, which we've talked about before. CoinDesk is repeatedly posting extremely biased articles. Typically, they are going against all altcoins except occasionally something like Ethereum. But generally you will see very positive articles about Bitcoin, slightly positive articles about Ethereum, then they will sometimes be positive towards more traditional altcoins, but anything else, they try so hard to make it look like they're reporting on news, like they're being impartial, but just know that CoinDesk is not a proper news outlet and they don't have proper journalists. Let's read this article. And look here, it is marked as news, not as an opinion piece. That is important. If this was an opinion piece, I would disagree with the content just as much, but then it would be appropriate. This is simply mismarked as news. Let's read this. A new report from crypto data startup Messari estimates that the true market cap and circulating supply of the digital asset XRP is markedly less than what data sources currently present. So far so good. You can argue if a report from a crypto startup that hasn't really been relevant is relevant enough to make it front page news. I would argue no, but okay, let's give them that. And but we'll very soon get into the first signs of something being wrong here. As depicted on data providers like CoinMarketCap as well as by Ripple, the distributed ledger tech company closely linked to the digital asset, XRP's circulating supply is pegged at roughly 41 billion tokens. And I have to cut in here because we're already seeing the bias here. Because, you might not have noticed it, but this little part here, the distributed ledger tech company closely linked to the digital asset. And with an article linking to an article about how closely tied they allegedly are, and this ties into a narrative around the XRP token that is being pushed by a lot of people as an attack on XRP, that allegedly Ripple is too closely involved and that as a result XRP is too centralized. Now there's nothing wrong with mentioning Ripple and Ripple's officials in this article, because that is relevant. But the phrasing and the need to do this in the second sentence of the article, and with a link to more, that places an unfair emphasis on this. And the closely linked is simply unnecessary. The distributed ledger company often associated with the digital asset would have been appropriate here. But in its report, Messari posits that of that figure, 19.2 billion XRP may be illiquid or subject to significant selling restrictions tied to daily trading volume, including at least 6.7 billion XRP held by Ripple co-founder Jed McCaleb that are subject to an agreement dating back to 2014. Now at this point, it would be perfectly acceptable to stop reading, because if you know anything about the crypto world, you know that Messari is applying an unfair standard here. Because for all cryptocurrencies, a significant portion of the circulating supply is tied up in some way or not actually liquid. We know that millions of most major cryptocurrencies are held in storage, are in wallets that haven't been touched for years, are tied up in escrow, in a billion different ways, are not accessible. And you only see this being used as an attack against XRP. No one is ever saying, hey, Bitcoin's market cap is too high because at least 10% of those are lost forever, and at least another 20% are in whale accounts that haven't been touched for years and that are not actually liquid and are not actually available to the market. Nobody is talking about that. Nobody ever says that. But for XRP, that suddenly becomes an argument as for why its circulating supply and as a result its market cap should be lowered? If we're going to apply a standard like this, let's apply to everything. But if we do that, we have to cut off at least 20% of the total crypto market cap. We have to cut off anything between 10 and 50% from the market cap of every single major cryptocurrency. We have to take a look at all these cryptocurrencies where you have to stake. Everything that is proof of stake, essentially. Everything where you're tying up your coins to stake. Everything where you can tie up your coins in smart contracts. We have to look at all these coins that have been lost or destroyed over time. And of course, we only have estimates for those numbers. But keep in mind here, this report is also working with estimates. Let's continue reading, but at this point there's very little value to the report, because it's just applying an unfair standard. In addition, Messari said that it believes that the circulating figure includes 5.9 billion XRP pledged by Ripple co-founder to a non-profit entity called RippleWorks, an amount that it contended hasn't been delivered. As well, Messari identified 2.5 billion XRP held by RippleWorks that are also subject to daily selling restrictions. Further, the report also estimates that as much as 4.1 billion XRP sold via XRP2, Ripple's money services business is also subject to selling restrictions. But Messari notes that it is impossible to track the magnitude of this illiquidity without direct disclosures from Ripple, so we use a reasonable estimate. All told, these factors have led to the market cap of XRP being likely overstated by more than $6 billion according to their reasoning. Following the publication of this report, a spokesperson for Ripple disputed Messari's findings, telling CoinDesk, "Not only does this report contain several inaccurate assumptions around lockups and selling restrictions, the entire report is based on an incorrect calculation of market cap. While decentralized digital assets like XRP are different from traditional equities, the term market cap is always a very simple calculation. Current price multiplied by total number of the asset equals market cap. That puts XRP's current market cap at approximately $31 billion. We believe that any other calculation of market cap for XRP is not a clear representation of the truth." The Ripple people are here introducing yet another potential number. You get to 31 billion if you count all 100 billion existing XRP. What is typically done is the major aggregators like CoinMarketCap exclude XRP that are tied up in escrow. And about 60% of total XRP supply is currently tied up in escrow. Now, there are various opinions around this and around whether this is a fair thing to do. Once again, you have to consider that for a lot of other cryptocurrencies, a large amount of the alleged available supply is also not actually available. So there's been a lot of controversy around places like CoinMarketCap, essentially cutting down the market cap from 31 billion to like what, 14 billion? I don't know what it is right now. And I'm a bit conflicted about it. I think I ultimately come down closer to the 31 billion number because it's just we need to be consistent about which standard we apply. So we either need to count every token that currently exists for each coin, in which case we get to XRP 31 billion, or, and calculating from 100 billion coins, of course, roughly, it's slightly less. Or we have to calculate how many are actually available on the market. But if we do that, we can't just do that for XRP. We can't only cut down XRP and maybe one or two other cryptocurrencies. We have to do it for all of them. That means we have to cut Bitcoin's numbers as well. That means we have to cut Ethereum's numbers. That means we have to cut EOS's and Litecoin's and every other cryptocurrency. And no one is doing that. That would mean we have to look at only what is currently available to buy and sell on exchanges, because that is only what is actually liquid on the market. So which one are we going to use? We have to, either one of them makes sense, but we have to be consistent. We have to apply the same standard to everyone, else it's not a comparison. And if there's one thing that is becoming very clear right now, with more traditional finance people getting into the crypto world, traditional finance is very clear that they're applying the same number that Ripple is applying here. That they also think every coin should be counted. Because if you look at the numbers from Forbes, for instance, they count the full XRP supply and not the arbitrarily cut off minus 60% number that something like CoinMarketCap uses. But ultimately, like I said, there can be an argument made for either, but you have to be consistent about it. And if you want to cut down Ripple's XRP's market cap, either to the number that you see on CoinMarketCap by excluding the ones in escrow, or even further, as Messari wants to do, you have to do the same thing to every other coin, and nobody's doing that. And that is why articles like this and reports like this are a hit piece. They are unfair, they are treating XRP differently from everybody else. And there is a very, very clear bias here. A very clear bias. And it does not make a website like CoinDesk look good at all. Because their bias is showing in how they're reporting on this, almost uncritically. The only criticism here is this brief quote from Ripple. But keep in mind, they have they have poisoned the well in the very beginning of this article by implying that they're too closely linked to XRP. So everyone who reads this article who doesn't really know a lot will trust the Messari report because nothing bad in any way has been said about them. And they will be primed to distrust this statement from Ripple. Anyway, let's continue reading. There's not all that much left here. In his report, Messari estimated that the figure could ultimately be higher, explaining, in reality, this estimate may prove to be conservative, as they believe XRP trading volumes, which have consistently fallen well below that of EOS and Litecoin, two crypto assets whose current reference market caps are a mere 17 and 15% of XRPs respectively. In addition, we believe the actual amount of restricted XRP in distribution to investors, banking partners, and team members may be significantly higher than our initial estimates reflect. So they're just going even deeper here. The comparison to EOS and Litecoin here is absolutely laughable. Do you know why EOS has higher volume? Because it's a dApp platform. XRP was not created for the same reason as a lot of other cryptocurrencies. XRP was not created as a trading asset or as a base cryptocurrency for smart contracts and dApps. All of these things can be done with XRP, but XRP was created for international monetary transfers and for monetary transfers in general to make these more efficient to be used at an industrial, at an institutional level. Of course, the trading volumes for XRP are not as high. XRP has a different target audience. XRP also does a lot more of its trading over the counter as opposed to on exchanges. That is not a reason to question the trading volumes or to question the total market cap. At this point, I hope I've made it completely clear that Messari's report here is absolutely laughable and that there is such clear bias working in the background here, both behind this report and behind how CoinDesk is reporting on it. And I guess I'm trying to teach a lesson here, and that lesson is be careful with the crypto news resources that you use. Because CoinDesk, despite how critical I am of this article here and how critical I've been of them at other times, they are still one of the best news sources we currently have. Because the crypto news space is incredibly, incredibly bad. All these websites, they're trying so hard to look like professional news pages, but there's rampant problems here. They have very few, if any, trained journalists. Most of these websites do not seem to have a qualified editor. There is undisclosed advertisement and paid posting on almost all these platforms. And when it is disclosed, it's often disclosed in a way that you might not even notice. Most of these platforms have a clear political bias. They are trying to look like they're impartial, but there's clear political biases. There are clear biases for and against certain coins, likely the ones that the owners of these platforms are involved in. And it's just all together, always read multiple different sources, always read with a critical eye and think about why are they telling you these things. That is something you should be doing in general when you're dealing with media, but the crypto news media, there are massive issues with much mainstream news, but the crypto press manages to be 10 times worse in every single way. So just be careful whenever you see articles like this. Like, okay, this should not be in the news section. This should be in the opinion section. This should be an op-ed. But yeah, and there were also problems. There were also grammatical issues in here that an editor would have fixed. So yeah, that's what I mean when I say I think most of these platforms don't even have an editor. And keep in mind, CoinDesk is probably the biggest of them. So if they can't do it properly, nobody can. But yeah, just a little lesson in media literacy. Okay, some good news for the rest of the day, and these will be brief. There are 2 new bit licenses in the state of New York for 2 major platforms. Stock and crypto trading app Robinhood has received a bit license to operate in New York, the New York State Department of Financial Services reports on January 24th. Robinhood now has permission to trade in 7 cryptocurrencies, including Bitcoin, Ethereum, Bitcoin Cash, and Litecoin in the US state of New York. If you've been paying attention to crypto for a while, you will have noticed that a lot of services are available in the entirety of the United States except the state of New York, because restrictions there are tougher. So getting these licenses is a pretty meaningful thing. According to the DFS, Robinhood has additionally been granted a money transmission license. Last summer, anonymous sources reported that Robinhood was in talks to secure a US banking license. The app began allowing zero-fee cryptocurrency trading in February 2018 with over 1 million signups for early access, and announced that it raised $363 million in May 2017 in order to expand its crypto trading platform. Keep in mind, May 2018, we were already 3.5–4 months deep into a bear market, and they managed to raise more than a third of $1 billion to expand their crypto trading. This is what I keep saying this is what I mean when I keep saying that all this money is flowing into the crypto space. Despite there being a bear market, all these big money people know that we have another bull run coming after this. The app is also reportedly looking to launch an initial public offering, according to a fall 2018 report from TechCrunch. Reuters reports today that Robinhood has a valuation of $5.6 billion US. That is pretty big, that is pretty big. That is probably how they can afford to have so many of their ads in like every single podcast that I've ever listened to. The DFS has also approved a bid license for LibertyX, which is the first virtual currency license recipient that will allow its users to buy Bitcoin with debit cards from traditional ATMs. LibertyX, which launched their first Bitcoin ATM in 2014, notes on their website that they have thousands of locations including debit kiosks and traditional ATMs that allow their customers to purchase Bitcoin. With the addition of Robinhood and LibertyX, the DFS has given approval for 16 firms in the sphere of digital currencies. So here we have 2 more licenses. That is more opportunities for people in New York State to buy crypto, to get easy access to crypto, and Robinhood is of course an immensely popular app. As it said there, 1 million people signed up just for the pre-trading, just for the, not pre-trading, just for the beta phase, I think. What did it say? For early access. So this is pretty big, and this is, like it says, 16 companies, 2 more now. That is a step in the right direction. And last but not least, we have yet more evidence of even more institutional interest in crypto, with Binance opening their own over-the-counter trading desk. Number 1 ranked cryptocurrency exchange Binance has announced it had launched its over-the-counter trading desk for larger transactions, according to a January 23rd blog post. The new tool, simply known as Binance OTC, offers services geared to users performing trades worth at least 20 Bitcoin, $71,000. So yeah, this once again is for the big boys. I remember, I think it was Kraken who opened an OTC trading desk just the other day, and they pointed out it was meant for purchases of over $250,000. So all the stuff that happens OTC, these are whales moving. These are massive corporations, these are banks, these are exchanges buying crypto holdings. These are large amounts of money moving at once. And of course we do not see this instantly reflected in the prices, but this is all stuff going on in the background that we won't be able to tell until later on, until we get reports, until we get more information about these sales. But this is all building the foundation for the crypto infrastructure to grow massively in the future. Because all these people buying hundreds of thousands, millions worth of crypto at once, what do you think they're going to do with it? These are not people just holding. These are people who are building projects on top of them, who are integrating these cryptocurrencies into their companies, who are planning to offer these through their services. These are all things that will pay dividends in the future. Our OTC desk allows Binance users to trade larger amounts of many cryptocurrencies listed on the exchange, with transactions being settled via their Binance accounts, officials explained in the post. The move makes Binance the latest major exchange to launch OTC services, following hot on the heels of the United States exchange Bittrex last week. In December, meanwhile, crypto finance firm Circle revealed its extant OTC desk had handled payments worth around $24 billion in 2018. At the time, cryptocurrency news and research publication DIA further found that an increasing number of major investors had begun to favor OTC over traditional trading methods. Now, of course, one big reason to go for OTC is that OTC is also much less likely to crash the markets. If you need millions at a time of a certain cryptocurrency, now if you put in a buy order, best case scenario, you will push the price up. But in the process, you will also end up paying more for a certain amount of the crypto you're buying. Worst case scenario, it can be there can be a sell order going live that could massively push down the prices. So if you're doing this OTC, that means you're not going through a traditional exchange. You are not going through an open exchange where everyone can see the movements and where it goes through the normal order book. And that way you can't mess with the prices. And that is one of the core reasons to do OTC. But takeaway from this is Binance would not be doing this if they weren't planning to make hundreds of millions, if not billions, from this in the next year alone. And that means there is such immense interest in buying large amounts of cryptocurrency by institutions, by billionaire investors, that there is no way the crypto future won't be incredibly bright. These are the kinds of people who can control where the future of crypto goes. And if all of them are buying, if they're buying billions worth of crypto all the time, what makes you think that crypto could possibly be dead or anywhere near dead? Circle alone did 24 billion in trading last year. That is like a sixth of the total crypto market cap right now. One company. Watch these things and buy while the prices are low. Of course, I'm not a financial advisor, do your own research, but buy while the prices are low. And with that, I will end this video. Despite all the nonsense that is going on with the government shutdown, with these stupid hit pieces being written by terrible news outlets, the future for crypto is incredibly bright, and that is just what I want you guys to remember every single day. Thanks for watching. You can read all of these articles yourself. They will be linked in the description. In the description, you will also find links to my social media pages, as well as ways to support the channel if you feel so inclined. There is a Patreon where you can support me on a monthly basis. There are donation addresses. There's a bunch of other stuff. I appreciate any tiny amount of help. Or alternatively, if you could just leave a like, leave a comment, and maybe share my videos with your friends who are also into crypto, that would be much appreciated. Thanks for watching.